gonna erase my charts.
All right, so we are live on YouTube as well.
Beautiful. I'm just gonna pull it up on YouTube as well.
Mm-hmm.
Give me a second. You're gonna get breakfast?
I'm making breakfast, yeah.
Okay, perfect. Before you do, let me just use the bathroom real quick, and then I'll be right back.
Yeah, no worries.
Thank you.
All right, welcome everyone. Good morning.
Good morning.
Let's see here. We got retail sales coming out today. What else? Uncertainty from Ukraine and Russia still.
All right, I am back.
All right,
Let me
awesome.
send this in here. Let's see. You got rid of the waiting room?
No, I'm trying to, but it was grayed out for me here.
Oh. It's all set.
That's fine. What I'll do is I'll make you the host, and then I'll come back.
Okay.
Yeah.
Cool. Let me send this.
All right, cool. Good morning, good morning.
Good morning. Let's see. Waiting room. Oh yeah, it's like grayed out.
Yeah.
Huh. Oh well. I'll just manually do it.
Yeah, no worries. All right, guys. I'll be right back. I'm here listening to you guys in the background, but I'll hop on in just a little bit.
Okay, sounds good. Let's see. My journal. Just gonna bring out some economic calendar. How's everyone doing so far this morning? And this week as well. You want to go through some psychology stuff before we break the charts down? Or you want to do the other way around? Nobody has a preference? All right. Let's go over the week.
I just saw that the mortgage delinquencies are also due this week. That's going to be pretty interesting.
We get a lot of stats this week, especially compared to last week. It normally goes like that. You know, you'll have one big week where you have like 60, 70 stats. Then you'll have like one where you have like 40, 50. And that's where you guys really want to know, and you want to be selective on your trades and selective on your risk in those weeks where you have like low volume, you know, not much going on, or especially like when you have a big stat coming out like NFP on a Friday and the beginning of that week is kind of dull, like Monday, Tuesday, Wednesday is pretty dull, then you really want to lower your risk on the trades that you're taking in the earlier time of that week. But let's get into some of the stats that we got this morning. So we had CPI come out this morning. Their prices rose. You guys are seeing global prices rise all over the place just because of central banks fueling their economy. Just because of central banks muting their economy, funding their economy and providing stimulus to their economy. So when you're pumping money into the economy like that and printing money, you're gonna end up creating inflation, right? There's too much money in circulation. So that's what we had this morning. Of course, you guys saw prices rise over here. So this is further stemming the Bank of England to increase interest rates, right? So whenever they're seeing high prices like this, it's going to tell them, okay, we need to increase prices or increase interest rates so that we can start curbing this inflation a little bit. So that's what we had coming out this morning. Did anybody trade London this morning? No?
I had an entry since yesterday in GJ.
Beautiful. Where'd you take it?
Around 156, 650.
Awesome. If you could send us your chart, we'll pull it up after we break the charts down.
Yeah.
I'll bring it down for you. But what we're expecting today, if anyone's trading in the CAD pairs, we have CPI coming out for the Canadian dollar as well. But the main focus for today is going to be core retail sales coming out for the U.S. So that's a big indicator for our economy and how many people are purchasing things. We have crude oil inventories, and we have FOMC meeting minutes coming out. Then later during Asian, we do have employment change and unemployment rate coming out for the Australian dollar. So again, main focus is really going to be core retail sales today. They're expecting 1% over previous minus 2.3, and they're also expecting retail sales coming out 2.1% compared to negative 1.9 last month. So obviously, these are very bad numbers for our economy. So we got to see if we have any kind of rise in retail sales or are people purchasing products from businesses. This is obviously a very important stat coming out for any kind of economy. So let's get into our charts over here, starting with GJ. I'm going to move that over here. We're going to start with our... Did anybody watch the breakdown that we posted last night?
I haven't gotten a chance.
Okay, cool. So I'll basically be repeating myself with this breakdown over here. So you guys all know how I view the higher time frames over here on GJ, how we've been in this multi-year downtrend, and we're now starting to break through it. We had 3 taps over here. You can always extend it over here, but at the same time, you have 3 times we're tapping. We have interest rates coming in, and I'll break down this further. But right now, we are holding support. We retested previous highs, and we're on our way up. Very much similar. Let me get my tools out here. Very similar to the price action right over here when it comes to the fundamentals. Because right over here, you had the 2008 market crash, right? Subprime mortgage crisis brought us all the way down to 120 from 250 up here. So we had basically all-time highs up here back in 2008. Or 2007 as well. We come all the way back down to 120 over here. We hold the support. We get the little retracement over here where price comes up, and then we, retest the previous low over here, hold the low. And as you guys know, the reason why we had this price action right over here is because we didn't recover from 2008 until around 2012, 2013. Right? We had that bearish structure over here where the economy was trying to recover. We're trying to get back to where it was, and it just wasn't doing so until 2012, 2013. You started getting stimulus, or you had stimulus, and businesses are opening back up. They're getting back to where they were, and that's where you started this upward trend, bringing price right back up to 190 over here to hold resistance. Then all of a sudden you have Brexit announced, right? And that's a huge hit to the Great Britain economy. That's going to change years of any kind of trade deals. It's going to be a lot harder for business to be done across the world. You're no longer partners with the euro. So that's going to hit the economy pretty hard. So again, we never broke the lows from 2008, right? And then you had very similar price action over here until COVID, right? And then COVID never broke the lows either of the 2008 market crash, right? Since COVID, we've just been in this bullish trend. So that's what we'll break down right now. I'll just draw some of our supports over here. Again, you got that support over here, but then you got COVID. Where March 2020, April 2020, we came all the way back down to 124 flat, rejected this area over here, held support, and we've been bullish all the way up to 156 to retest this high. I'm sure you guys, any of you guys that have been trading for at least 2 years know that, we had that massive bullish run on GJ coming right back up to all-time highs. So we're going to mark off 156 over here. We're going to keep it nice and simple. All you want to do is just mark off key levels on these higher time frames. So you got 156. We're now sitting in a higher time frame range right here. So the support of that range is 149, which was previous candle body highs. So you got 149. And also, you do have your bullish trend over here. The price has been respecting. So now, as you see, we're starting to break out of that multi-year downtrend and head up. Now, over here, quick breakdown of these candles over here. Again, we retested 156. Buyers cashed out. Sellers took over. We come right back down to 149. We get rumors that they're going to increase interest rates, which brings us right back up to 156 and actually 158 up here, creating this high. This is actually yearly high up here, right? They don't increase rates in November. They increase rates as a surprise in December, bringing us right back up to the 157 level. And then we ended up rejecting that area at the end of January. We rejected 156. So obviously you see 4 months in a row, very strong level that we keep projecting over here, right? Now what we had was another increase in rates, bringing us right back above 156, passing the high of the previous bearish wick over here. Are we going to continue up if we get further positive data coming out of Great Britain, where it's like, okay, now we can start increasing rates even more? We could do it multiple times this year if their economy is stable enough after it happens. Because as you know, when you increase rates, you make it harder to do business, right? So when you're doing that, it's harder to really move an economy as a business owner or anything like that. Everything costs more. Money costs more. If you're trying to get a mortgage, the mortgage is going to cost more. You're going to have a bigger interest rate, right? So all these things are it's a little bit harder to run an economy that way. But nonetheless, it has to happen or you're going to have massive inflation. So again, monthly, we're holding support over here, right? And we started pushing up. We're going to break this down on the lower time frames over here, where you can see some of these levels. So as you guys can see, since retesting this area right up here, we had very similar price action to the left, right? You can see this price action here where buyers cashed out. We came right back below 156, but we ended up holding support over here instead of breaking below this level, retesting it, and continuing down to 149. We actually held support at that level this time. So we had a nice support formed right over here, previous resistance here as well, where we actually rejected. This candle actually closed with barely a bottom wick, and then you see this rejection right over here with a weak bullish candle with a wick to fill. No bottom wick on this candle, strong bullish move over here, where we then ended up closing below 156. So we rejected 156 with this level. The next week, this candle ended up opening bearish, where it looked like we were going to reject 156 possibly and head down here to possibly continue up or head right back down, and we would be ranging in here, right? But we ended up midweek, flipping bullish, passing the high of this candle and coming right back up to 158 to retest that high. And that's off the heels of increasing rates, right? So we tapped 158. I'm actually going to draw an actual horizontal line. So we know that 158 is a very significant level. Right now, it's only Wednesday. It's midweek. We've already created this bottom wick so far, right? We've created the bottom wick, never passed the low of the previous, so we created a higher low, flip bullish over here, and now we're starting to head right back up for 157, possibly 158 as well. We'll see if we can get there, but obviously 157 right here is a significant level as well, where we have candle body closes. Looking at the daily. Now the daily, we've been respecting higher highs and higher lows here, where you have this bullish trend where price pushes up and closes above 156 over here. We end up rejecting it, but holding a higher low, right? Where we then got a strong bullish candle closing above, engulfing these candles over here, closing above. This candle passes the high right away, rejects it. But the thing is, we closed above this resistance right here, right? Before coming right back up to 158. But the thing is, as you can see on these higher time frames, you have price coming right back down into that level, right? You have this doji candle close, you have a bullish candle close at that level as well, and you create a higher low and a higher high with this candle as well, starting to push up, right? You just got to be aware of this level right here. You got to see what's going on. And also, as we broke down last night, we're starting to break this level over here, right? All these wicks keep projecting this level over here. Now we're starting to come above it. So what we were saying last night was that this is the level we're talking about. Can price close above this level, come down and retest this level, and then continue right back up, right? I can definitely see that happening. Oh, we got people coming in. Yeah, put that over here. People were waiting in that waiting room. All right, so that's what we're looking at on the daily. 4 hour. Now, the 4 hour, I could see why people started getting maybe confused yesterday, right? Where, as you can see over here, we've been in this bullish trend, but we have this common support of 155,500, common key area over here that we came down to retest after coming back below 156, right? So a lot of people, this is what we were talking about yesterday when it comes to the bullish trends over here. A lot of people start getting confused with these trend lines where they'll start drawing it like this, which, very well could be valid, right? We could be retesting this area to continue down, but at the same time, we never really broke market structure. We still held support over here, and we're in that phase of increasing rates, right? So risk currencies are up a little bit, especially the ones that are increasing rates, especially after yesterday when Russia kind of de-escalated and they said that they wanted to be more diplomatic about their approach with Ukraine. That obviously brought some calmness into the market, right? So a lot of people poured their money out of the Japanese, that's more of gold, but more people poured their money out of the Japanese yen, and we've just been on our way back up again. So right now, we never broke market structure. We're in this bullish trend over here. So what I would do, unless we start breaking below over here, then this trend line, I would say, is invalid. We're still in this bullish trend over here, right? Still making higher highs, higher lows, still respecting market structure. And now you have this minor bullish trend right here that we're respecting. So again, we had that level over here where price kept rejecting. Previous support as well. Got that resistance right here. We're now, these candles are getting a little bit weaker as you're starting to come above this area. Could we get a deeper pullback and then continue up? We got to see. And we also got to adjust these levels over here to see if they make sense on some of the lower time frames. But this is the 4 hour, creating higher highs, higher lows. We have a clean move to the left right now. But this wick looks like a bigger wick than the candle over here. So we got to see what's going to be going on here on the lower time frames.
Hey, Steph, is it okay if I ask a quick question?
Sure.
I'm just wondering, because I see that level that you guys were talking about, it seems pretty close to one of the weekly levels that I had marked off, which was the weekly support at 15700. I was just wondering, my original question was actually how come you guys didn't mark that off? Like, what about that didn't seem significant? But then as I saw you mark this up, it looked like it was pretty close. So I was just wanted to ask about that.
Yeah, what you could do, you could put that, like if we go to the weekly and we see what's going on there, I was actually going to where you have these candle body highs over here. That's actually a good point. You could put that horizontal line there as well. Wow, almost got it. And now if you go down to these lower time frames, you're going to see we're starting to reject that area. So that's a great point, Miles. I'm looking at the most recent support and resistance. So obviously we're holding a support here. We have a resistance here. Wick came into this area and a resistance right here as well. And then you got the key areas to the left as well. We see how price shot down from here. Perfect support here, right? Mm-hmm. So you could see this all in the higher time frames. Obviously 157, very psychological level. And it looks like we're struggling to get above that level over here. So can we see a fake out of 156,800 or 850, whatever level you want to call it. I would say this is 800. Can we see a fake out of this area and continue down? I would say we're going to have safe buys above 157 over here, obviously, but we're struggling to break above. It looked like we closed above. We passed the high of that candle right away, flipped bearish, closed bearish, but respected this level. Then we got a support formed with that candle right there. This candle, I'm sure, looked like it was going to continue coming out, filling that wick, mirroring the move to the left, and continuing right back up to 157,500, right to the left over here, right? So right now we're rejecting, but we are still holding support over here. So, never say never. We could very well hold support and continue up, but right now this is a range. This is now a no trade range. Looking at the 30-minute, you'll be able to see that even more, right? So we're just ranging in here. Again, we got the move from this morning, and that's about it. We'll see if we get anything. It wasn't much of a move. It was, we finally broke above 156,800, which again is a psychological number. It's also a significant level, but also when it comes to breaking through levels like that, especially after last night where we were just kind of very rangy and get big wicks, smaller bodies over here, you need fundamentals to break yourself out of that area, right? And that's what we got this morning, right? So higher prices came out. Now we're kind of just ranging in here. I wouldn't trade in here, and what we're going to do is just mark this off. We're going to have a plan for the session, as you guys should all have. So we got a no trade range over here. We're going to have safer buys above 157. Now, do we have any case, and can anybody make any case for sells here, or where sells would be valid? Let me see if I can get rid of the waiting room. Yeah, why is it not letting me? All right, so as I said, when it comes to the higher time frames over here, breaking structure and how we never broke structure over here, and we're still holding support, where could you say we could get good scalp sells? And where would that be breaking structure? I would say on these higher time frames, like the 4 hour over here, I think you're going to get safer sells below this area because we're still bullish here and we're still bullish on the higher time frames over here with this trend, right? So you're going to have safer sells once you break this structure over here for any kind of intraday trade. I think you're going to have way safer sells below 156, right? You got clean moves to the left, and then you got this move breaking higher time frame structure of 155,400 to then continue right back down at 153,600, right? So I wouldn't really be looking for any kind of sells here. I think if you want to be a cowboy, you can maybe take sells here. Let's see if you got any room right here. You only got about 17 pips here, right? So just be aware of this. I wouldn't really be looking for too many sells just because of the price action to the left, all these wicks over here starting to get a little bit messy. Look at the 30-minute. Yeah, once we come into here, it's going to start getting a little messy over here. So I think you're going to have safer sells below this level right over here, possibly right below here. But we got to see what presents itself. We got to be fluid in the market and see what kind of setups we start getting. Do we get like a strong bearish candle? We get a nice little retest of this area somewhere in here, and then we continue down and we get some bearish candles closing. Then you possibly have a quick, short-lived sell, right? But you're not going to have any kind of long-term sell where you can hold a huge runner unless we get terrible data, unless we get something going on with Russia and Ukraine today, because they did say that they if they were going to attack, it was going to be on Wednesday. So I don't know if that's going to happen. We shall see, but that's been something that's been going on with them for decades, right? Ever since, back during the Soviet Union. They were part of the Soviet Union. So that's GJ over here. Again, safe buys above 157. I wouldn't really be looking for too many sells over here. There's no real point. See if we hold support over here and exit this area, and then you may be able to get a nice move. Also, we could range until we hit this key area over here, and then we continue up. So that's GJ. Anybody have anything to add? Who was it? I think it was Arsh, or was it Andreas that had that trade on GJ that they were going to send the chart?
It was me.
Okay, cool.
I'm not sure how to share it. Do I just send you the URL?
Just go to the camera up here, copy link to the chart image, the third option, and then you can send that into the chat. Let me just pull up YouTube right here and then get a sip of water.
I sent you the Zoom chat.
This is the typical.
Some nice cold water. Here we go. All right. Okay, beautiful. So where'd you take this exactly?
I think I made it. Yeah, this was on the hourly, and so my take profit should have been at the 157,100. I placed it a little higher for myself at 157,600, and now I need to do some trade management. I've trailed my stop loss to bring it over to 156,750 area now. But yeah, I entered the trade at 156,650. Placed my stop loss at the starting at 156,550. And yeah, that's what's been going on.
Okay, did you take it based on this candle? Did you take it over here?
Yeah, I took it based on the first candle that you pointed out.
This one?
Yeah.
So as it was creating this bottom wick, or as it was flipping bullish?
Yeah, as it was flipping bullish.
Okay, cool. So when you go back into your journal and stuff, are you ever confused about where exactly you took the trade?
Yeah, I don't remember which exact candle it was like that, but I do remember the price from the from MT4. Yeah.
Got it. Okay. Just like a little pointer for you, like for the future, so that you don't confuse yourself so much. Let's say, like last night, I took this trade right over here during Asian. I grabbed a quick 8 pips. We had our consolidation right here, where we were holding support, right? A lot of wacky candles, but then we had this liquidity grab right here, right? Get the liquidity grab, strong bullish candle, get another liquidity grab, the candle flips bullish again. And we start closing above this resistance over here. So I waited for some volume in Asian for this candle to create its bottom wick, and then we passed the high of that candle right over there, and we got that nice volume push coming right back up to this area. I secured most of 8 pips. Runner got stopped out at break even from the spread during Asian. So we had a wider spread during Asian. That little wick right there stopped me out. This would have stopped me out anyway. But what I did, like when I'm journaling this, the reason I'm bringing this trade up is because where I entered, I'm putting this P&L tool exactly where I entered, right? Save stop loss below the previous candle right here. And then the take profit is exactly where I want it, right? So now I know if I go back into my journal months later and I go look at a trade from, let's say, September of 2021, I know exactly where I entered, why I entered, what I was doing over here, right? Like if I put it over here, I would be a little confused. So that's just like a little pointer for you, so that it stays clear for you.
Yep, it makes sense.
Does that make sense? But thanks for sending your chart, as always. That helps me help you. Again, so far we're holding support over here. Let's go over to gold right now. In gold, I'm just going to point out a few trend lines over here. Actually, just one on the monthly. You have one where price has just been respecting this area over here. Previous resistance to that trend. Now we have a support being held and pushing up from that area multiple times right here. Now we have a couple levels that we want to mark off. Support, resistance, most important. We have 1680. As you guys know, we've tapped into that area multiple times. we have 1750, which we've been holding as a support for quite some time as well. So we're going to mark off 1750. 1830, as you guys know, been a very significant level that we keep messing around with on gold. We also have 1800, which we can mark off in the lower time frames, but we've definitely cleared 1800. We were definitely flirting with 1800 for quite some time inside of this range between 1830 and 1750. Just been ranging in here, higher time frame range. Now we finally have had this breakout of 1830 on the higher time frames, and it looks pretty healthy. Created a higher low and a higher high right over here, right? Pushing up into that 1880 range, which is another level that we're going to mark off here, because that's the level we just tapped into. All right. So we'll mark off a few levels inside of here, but it looks like these are the main ones for the monthly. You can also, yeah, that's about it. We'll look at the weekly now. Now the weekly, again, we had that 1800 level. We have 1780, where we ended up holding support right over here multiple times, right? This is a high demand zone where we just drive up from that area every single time we touch into it, right? So now we've had that fear into the market. Russia, we have inflation, we have some COVID stuff. COVID's kind of taking a backseat. It's kind of, it's not looked at as serious right now. You got a lot of lockdowns coming down, which is good for global economies. So I think they're starting to realize that this is something that we're going to live with. This is not something that we're going to beat. Me personally, I think that was the wrong message the whole time. Like, you can't just beat a virus. It's something that we're going to have to live with, right? So now that we have lesser extreme variants going around, now that, that's happening, now we can start opening economies and start getting back to normal, which is good, right? Now the main thing is inflation and the Russia-Ukraine tensions, geopolitical issues going on right now in Eastern Europe. So again, we ended up finally getting that clean close above 1830. But look, what has happened last time we've gotten that close above 1830? We've just shot right back down, right? So we're now rejecting 1880 over here and starting to shoot down over here. Now, we had somebody in the group actually yesterday. I've had my trend line, and my trend lines are something that it's just like, okay, I keep on the chart, they make sense, whatever. My main way of trading is support and resistance, supply and demand. So I was actually looking over here, and he pointed this out to me, this trend line on gold, where I think I originally had mine somewhere in here, where we were tapping in multiple times over here, and now we're tapping once more over here. That could be one, but at the same time, you have this one as well, where price is tapped here, 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 over here, right there, and now we're starting to come right back down. We just exited this pennant, if you will, right? So can we be coming down to retest this area? Obviously, we got more important levels like this support right here. 1850, previous support, resistance. You can drag that all the way to the left if you'd like as well. Always been a significant level, 1850. And now we are potentially holding as support, right? This level, or this daily candle was bearish last night, looking like it was going to come down and fill this wick. But are we going to hold support over here and continue to drive right back up to 1880? We need more fear in the market for that to happen, right? I think that's about it. But that's a nice bearish daily candle, because we could print like bullish right here, like a weak bullish. Next candle could create a bottom wick or a top wick, pass below that candle, fill this wick, and continue down. But we got to clear this level over here. We got to look at some of the levels that we're sitting in. All right, looking at the 4 hour now. 4 hour, to me, looks like we're in a big range right here, right? There were a couple like things that we could have looked at last night where we had this support over here. We actually closed below that support, came up to retest it, and it looked like we were holding a resistance right here to retest this low. But if you guys watch the breakdown that we did last night, I was telling you to stay out of this whole range from here to fill that wick. If you didn't have this level right here, I would have been taking this impulse entry to continue right back down and fill that wick, right? Creating a lower high, creating a lower low, passing the low of that weak bullish candle right there. Perfect scenario. Got the previous support, now resistance. I like that. But at the same time, I'm not going to take that when you have a level like 1850 sitting right there, right? And it's during Asian, you don't have much volume. So you got to be selective. You got to be smart with your decision making when it comes to taking trades. That's going to help your win rate, right? When you're able to hold out of trades that it's like, I'm not feeling that. That's not, that's not going with my trading plan. Or if it's a little bit lower probability of a setup, you know that you're going to be lowering your risk for that. That's not where it's like, I know a lot of you guys have that feeling where it's like every trade is make or break. When you're in the trade, it's like, oh my God, like, I could flip my account with this trade, or I could do so many things with this trade right here. I just want to make a bunch with this, and that's it. Or let's say you put a lot of work in over the weekend, back testing, and you come into Monday, that first trade opportunity that you see, you just want to risk a ton on it, right? It's all about the decision making that you're making across the entire week, where you're selecting different trades in there, lowering your risk for some, raising your risk for others, for some of the setups you see all the time, and just playing the game, right? Not letting the game play you. So super important. So again, we're just ranging in here. Looks like some missing price action. What you do have are these levels, right? Where if you break, you got a clean move to the left, right? Got plenty of room right in here, all the way back up to 1880. You got about 200 pips coming right back up to 1880. Now, if you break this, we got a clean move right over here, coming down to at least this wick over here, which we can mark off. And we'll go down to some of the lower time frames over here on the hourly. Adjust that real quick. There we go. Most recent support resistance. You do have this 1850, 1852 level over here, where maybe we could possibly get a sell below this level, but you got all these wicks over here. So we got to be paying attention to what's going on with these wicks on the lower time frames. All right. So far, I would say this all here is, I don't want to say it yet. Yeah, this is a little messy. I was going to say you do kind of have a move right here, where if we break this previous support, you could be taking this range. How many pips do you have in here? About 25. I would probably personally stay out of that. It gets really messy in here, especially once we break 1852 and coming into here. Again, very messy. This is the 30-minute. It's not like this is the 5-minute. So you don't have much of a clean move there. But once you break 1848 right over here, you get a clean move over here. So I think safe sells are going to be below 1848. And then you're going to have safer buys up here above 1860. Probably see how like messy all this is. You want to be smart when it comes to trading at levels like this. It's clearly a range on the 4-hour over here. Everything's sideways, right? We ended up holding support over here, but now it looks like we're about to break the low over here. Possibly, we haven't done so yet, but we have on the lower time frames. We're breaking we're creating lower lows and lower highs with this current candle right over here. So we rejected 1860 right over here, and now we're just kind of sitting in this range. We got to see what's going to be going on, right? And we're also waiting for retail sales. So if we get some really bad retail sales, you could see price breaking 1860, I'm sure, and continuing up, right? Holding this support over here and continuing through 1860 with a clean move to the left, right? So now if you've back tested What I actually want to. Yeah, we'll stick with 1860. If you backtested retail sales and you're comfortable trading it, I wouldn't do so. But if you're comfortable trading it, you could very well place a buy stop above this level to continue up and grab some of those pips. Now, gold does not move like normal pairs. Gold is where, like, if you're doing something like that, or you're taking like a volume push anytime, not just news, you really want to close the full thing or majority of it. Right, gold is one where like you can have price come 25 pips in your profit, and then all of a sudden it could snap right back and stop you right out, or take you at a break even, right? So it's not like other pairs where that's a little bit harder to do. So that's gold. A little messy in here. I know it kind of looks messy with the breakdown, but you have a lot of wicks over here that just makes it very hard. That's where you really go to the higher time frames over here to see how you can adjust and how you can see the market a little bit clearer. Just trying to see if there's anything else I can add over here. Damn, why can't I get rid of this waiting room? I apologize anyone that it took a while to come in. Yeah, it's not popping up here. All right, so now let's go back to GJ. Again, we're still holding support here. This is a no trade range. Anybody have any questions? Anybody have anything that they want to go over? Any trades for the week that we can be breaking down?
I just want some help with the trade management with what I took. There's not a lot of trades that I've taken. So with GJ, the entry that I took over at 156,650, I should have taken I think a majority of my profit, or at least half, at 157,100, and now the only outlook that I have is I place my stop loss at 156,750. But yeah, it's kind of ranging, and then on the smaller time frames between this 157 and 156,800.
Just looking at these lower time frames over here, we are creating these lower highs over here, so we're struggling to break that bearish structure so far while we're in this zone. Now, what was your plan for this trade? So you entered this over here at 156,650, right? Once we broke out of this consolidation over here, we retested, held a higher low over here, and that's what I'm guessing, you took this with, right?
Yeah.
So are you a swinger or scalper?
Mostly swings, yes.
Oh, mostly swings. Okay, so again, what was your plan for this, and what was your exit plan for this? So obviously you entered as long as we held support over here. So that was your entry plan, but what was your exit plan?
My exit plan was way higher than this, but I don't know. Is it the rejection of 157,100 just because it's a very strong technical level, or is it because the CPI numbers that came out higher, because of which that we see the one rejection of 157,100 level? So my plan was to take profit for the first time a lot higher at 157,600. Mm-hmm. But now I'm trying to readjust that to perhaps seeing this choppiness and closing the trade at 156,850s.
Got it. Okay. Well, as you can see, and again, like Miles was pointing out too, 157 is such a psychological number, and also a strong resistance on the higher time frames. That's where our candle bodies were. So you seeing that, and I can see why you took that buy, because I took one very similar but a little bit earlier, right, where I got that impulse entry, and then I was done with that. I was good with that amount of pips during Asian, but that's just the way I trade. Now for you as a swing trader, again, you're seeing this level right here that we need to break above, because you see all these wicks, right? You see all these wicks rejecting. So you need like a close above that level over here and maybe a retest before we continue through 157. You need this is actually 157 right here. So you need to break through 157, retest to 157, and that tells you that we can now come up to 158 and retest that high, right? Steph, we have someone trying to join. So they're stuck. Yeah, no, I hate this waiting room. I don't know why it's not letting me. I just let them in, but I just tried disabling it, and it's like blocked out. Like I can't disable the waiting room. Thanks, Kat. So that's what you really want to wait for that swing. I can see why you took it though. We're creating higher lows, higher highs, strong bullish candles, pushing up. But again, like this week, we didn't have much volume with GJ. Like if you notice, the beginning of the week, like we didn't have that many moves, right? Everything's been kind of rangy. Do we have enough volume to stay above 157 or stay above 156 800? This previous area over here, right? And break through 157, we don't have that much volume right now. Even with that data coming out, obviously it didn't move us that much. So now we're just kind of ranging in here. I think have you secured anything at all?
No.
Okay, I think if we start closing below 156 800 over here, then you could start securing some of your position, or maybe like cut half off, or maybe go break even. Right, something like that. What are your rules when it comes to that?
I don't have any. I'm still in the discovery range of all of this stuff.
Got it. Okay, how long have you been trading?
I mostly do stocks, but with forex, I've only been paper trading, and this is literally like my third trade.
Okay, cool. What are you just naturally a swing trader because you're coming over from stocks?
Yeah. I even stocks, I take longer positions, going over to like even months. So that's just that kind of psychology.
I would cut off half right now, or just go risk free. So when it comes to that, I can see why you're a swinger coming over from that. Have you ever thought about turning scalps into swings?
Yeah.
Now, also, like, it really depends on your personality. It also depends on your schedule throughout the day. Like, what are you actually able to do? And, like, are you forced to be a swing trader, right? Just because of your schedule. Is that the case?
That is the case. Yes.
It is
my
the case.
9
Okay.
to 5, which is pretty busy.
Okay, cool. How are you with technical analysis and reading candles? How have you been with that so far? Hey, Jen.
In general, I think I'm okay with it. Like, I'm able to mark levels, identify like key levels of support in there, resistance, and trade based off that.
Okay. So when you're breaking down the chart, don't confuse yourself too much. Just understand that the daily candles are the same exact thing as the 15-minute candles, right? Only difference is the time in between and how much data is in each candle, right? So, and it also has to do with how long these trades take, right? But when it comes to the candles, the anatomy and breaking these candles down, support and resistance, it's all the exact same. So the only difference is you're just holding trades over a longer period of time. Now, the way my brain works and my psychology, the way I look at the market, I can't trade anybody else's strategy if it doesn't make sense to me. If it doesn't if it doesn't match my psychology of the market, it's just not going to work for you. So like one very profitable system for one person could completely not work for somebody else just because they don't look at the market the same way. Now, the way I look at the market is you can easily get 10 pips a day, right? And if you get a ranging market, maybe you don't trade that day, and that's completely fine. But you're almost guaranteed to be able to get 10 pips the next day, right? So with me, it's like, all right, let me get my 10 pips, and I'll turn some of these into swing trades if I can, right? There's a couple that you can with GJ, and there's many opportunities that you could do that, but that's just the way I look at the market, knowing that I could definitely be grabbing 10 pips, and that's it. 10, 15, 20 pips, really depends. 20 on gold, right? But just make sure that you keep erasing your chart and keep redrawing it. Keep breaking it down. So whenever you come to the market, just erase the whole thing like we did today, and then rechart everything again. And over the next week or two, everything is going to start clearing up. I actually want to ask one person. Kat, you with us?
Hey guys.
Hey, Kat. So Kat is one of those people that's been doing that, right? She's been erasing her charts. Somebody that was a little bit hesitant to do it at first. Has that been working for you, Kat?
Yeah, it's been helping me. I do take a while, so it is a little bit annoying. Like I've been charting up this entire time just because I've been trying to develop like a whole little system based on the breakdowns of top-down analysis that both you and Sharma have kind of helped me with. To help price make more sense and structure make more sense and stuff. So it just takes me a while and I accept it, but I really think it has been helping me. So I guess it's been like 2 weeks already or a little bit more.
There you go. Yeah, you're just going to start seeing, maybe it'll take a little bit longer, but you're going to start seeing the market a little bit clearer. You tend to get a lot, like there was a point in my trading career, especially in the beginning, where I got lazy. I didn't want to erase the charts, right? And I would start getting a little confused with the way candles were forming and stuff, and I'd be missing levels. Because every time, it's almost like watching a movie, where like you watch a movie the first time, it's like, cool, it's a great movie, whatever. I'm going to watch it again a week later because I liked it that much. Oh, wait a minute. I just caught something that I didn't see the last time I watched this movie, right? They just said something. Or it's the same thing as repeating a show, right? You repeat Breaking Bad, you just catch something in the second season that you didn't see. So it's the same thing when you're erasing and recharting your chart. It's like, oh, wow, I didn't see that level. Just like what I was talking about what Noah was pointing out last night with me, showing me this level. No, it's on gold. Gold's starting to break back below this level over here. So we're actually going to erase that. And we're just kind of sitting in this range. You may be able to get some sells, high risk, high reward sells right here. But again, it's messy on the lower time frames. And I think safe sells below 1848. But this level over here on the weekly, daily of gold, I never noticed this trend line over here and how we kind of broke out of here. And now we're maybe coming down to retest this level, retest 1850 more importantly, to maybe continue up if we get some more fear in the market, or if maybe we get some dovish sentiment out of the Fed or any kind of central bank. But right now we need de-escalation of Eastern Europe, and we need more hawkish sentiment coming out of the Fed or any kind of central bank, and you're going to see price break right back into this pennant and right back into this range, more importantly, of 1830 and 1750. Gene sent a chart. Awesome. Okay. So Gene, you want to break this one down for us?
Yeah. My name is actually Jean. But
Jean, what's up, man? My bad.
No, you're good, man.
Happens to me all the time. Don't worry about it.
Oh, yeah, I know. I took this during, this is from Asian last night.
Cool. And how did it play out? I see you came close to your stop loss. Is this where you entered?
Yeah, I already took partials at the green line.
Beautiful.
Now I'm just trying to figure out if I want to get out, if I want to wait it out, because I don't like the way it's rejecting up here.
Okay. Whenever you start feeling uncomfortable like that, you're more of a scalper now, right?
I'm trying more to be scalp to swing. That's why I took a partial, and I was trying to hold it to the top or close to. But I don't like the way it's rejecting 157. So
yeah, the way. So this was your plan the whole time to take partials at 157.
Yeah,
smart. Psychological number. You get that rejection on the weekly as well. So that was smart doing that. Now you start to see price coming against or breaking below this support over here. So if you either get a close below, or it looks like we are coming back below with this top wick and how it's flipping bearish after a strong bearish candle close right there. That's where just go risk free right now. Are you risk free?
No, it's where it says like 12 pips. So yeah, I was trying to see how this candle closes, and but yeah, I think I'm gonna go risk free because it looks like it's gonna push down.
Okay. Now this doesn't mean I'm right, Because this is just the way I look at the market. But for me, if I'm this many pips in profit, I already just took partials over there. Like I don't want price coming back into like how many? What were we at right over here? Charts. You took price somewhere around here. So you were about 30 pips in profit. So if you're 30 pips in profit, you should never let price go back in the drawdown. Right. You should never lose money in that trade.
Right, absolutely.
I would live to see another day, and I would set that to break even. And then, if we start getting another support formed and price breaking back above 157, maybe maybe you have another entry. My bad.
Right. Absolutely.
My bad. But again, not every trade needs to be a home run.
Oh no.
No, I know you're not looking at it like that. I'm just saying,
right.
That's how a lot of people look at the market, especially as swing traders. Every trade needs to be 100 pips, right? It's just not going to be like that. You gotta know when to. that song, "The Gambler" by Kenny Rogers. You just gotta know when to fold them, know when to walk away. It's like okay, it's not like you're taking partials and you just keep taking partials on the way up. This is. You're just going risk-free now. So price could hold support and continue up in your direction, and you could catch all those pips. But now you're not worried about losing any money now.
Right.
You should never lose money 30 pips in profit.
Yeah, no, absolutely.
So.
But, yeah, it hit my, I had the partial TP during the night with Nike Keys. So it went awesome. To break even during the night, so I was safe. But I moved it when I looked at it just now just to figure it out. But,
there you go.
But I went back to break even.
Good job. I mean, I'm sure this is the same way for a lot of other mentors or anything like that. But I'm just as impressed by closes as I am by entries, right? So when somebody, especially with gold, Kat sent a great trade over yesterday. She took on gold, and she just closed it right away as soon as she got that spike, and as soon as that resistance was hit. She just closed the full thing, right? Perfect entry, nice volume push. Kat, did you send that in Slack?
Yes. I might have sent them in both groups as well.
Is that New York?
In the New York session thing, yeah.
I'm just here.
Right before you sent the link, I think, to today's Zoom.
I think it's right here. Beautiful. So Kat saw that we were holding support over here. I think 1841.
No, sorry. Ignore that first P&L tool. That was a trade Sharma took.
The entry was right here, right?
Yeah, I entered a little bit later because I saw that the candle broke its own high, and I know that it would have been valid to get in as it retraced a little bit, but I kind of got a little iffy, so I just waited for it to break its own high again, and that's when I entered with that whole first. We saw that support, which was the confirmation, and the break and retest, which was the entry, and that was my entry.
Beautiful. Yeah, this is actually very similar to my trade on GJ last night, what I was saying, where we had this consolidation in here. We break out of it, we retest it right here. This candle creates its bottom wick, passes the high of that candle, and then we're off. Right? So, but what I loved that you did was we had a clean move all the way up into this consolidation area. Price shot right up into that area. You just close the full thing. It's boom, done. Right? And as you know, gold started ranging for the remainder of the session over here, pretty much. Right? You couldn't really squeeze that much more out of it. So with gold here, you got to know how to trade gold, and you got to know how to trade your other pairs, and you got to know that they move differently.
Yo.
How was breakfast?
Breakfast is good. Just got done.
Awesome. Beautiful. So yeah, Jean is break even right now, so that's good. We're now coming right back into this range over here. Looking at the 1 hour is now flipping bearish. What time is it? for 748. So now we normally get some good volume. Actually, we haven't been getting that volume push that we normally get around this time. It was more mid last year, and towards the end of last year, I started to notice that we weren't getting that volume push as much. I normally saw between 2019 and mid 2021, where on GJ, around from 7:30 to 8.
Thank you, sir.
From
You're welcome,
7:30 to 8. 7:30 to 8, or 7:45 to 8, you got that nice like 10 pip, 15 pip jump or tank on GJ.
Yep.
Always a great time to trade or scalp GJ. I love that time period, and all of a sudden we haven't been getting that. So that's where you need to adjust a little bit and really back test your pair and understand where you're getting those volume pushes. Because if you guys are scalpers in here, you're volume traders. So you're looking for those little entries where you get your setup. You know that volume's about to be pumping in 8:15, 8:30, 9:30, 10 o'clock. We've been getting some really good ones at 10 o'clock. You just got to know when you're going to get that volume push, especially when you're taking impulse entries. All right, if you're not getting that volume and you see that impulse entry setting up, but it's like slowly doing so, maybe you want to wait for the candle to close. So just your goal should be to build intuition with your pair and understand the way it moves. Build that sixth sense of your pair, knowing like the way it's going to push, where it's going to go, all that stuff. Like that just comes with experience and time. And the way you shorten that is with back testing. Right? You can get a lot more experience in a lot shorter amount of time when you back test. And what are the stats? I think these stats are generous, but they say 75% of traders don't test out their system, and only 25% of traders do. And they say 25% of traders are actually profitable in the industry, and 75 fail. I think it's way more than that. These are stats from Naked Trader. If you guys have read Naked Trader, great book. But they say 75% of traders don't even test out their strategy. They don't even back test. I mean, you're in the hardest market in the world. You might want to do that.
I think that's true of anything in general. Like whatever you're trying to do, if you don't test it out, how do you know it's going to work? Right? So you have to test out your strategy. And I was listening to you guys in the background too, and exactly what you said, where it's, what works for one person is not going to work for a different person. We come on here, like, we try to come almost every week, but you guys get a weekly outlook almost every week, right? So we break down the markets and everything. So in that sense, if every strategy was going to work for every person, by this time, given how many weekly outlooks we've done in the past, like, almost a year, like, you guys would have understood exactly how we see the markets. Yet, we get questions sometimes and we're like, all right, well, that was a different way to approach the market. So we learned from you guys as well, but what works for us, the way that we see the markets, is always going to be different from how you see the market. And how we see the markets, like Stefanos and I, is always going to differ from each other as well. There are levels that Stefanos marks off that he finds significant, but in my trading, when I'm going back and I'm removing everything from the charts and I'm doing my analysis again every time I come onto the session, those levels really don't matter to me, because to me, there are other levels that need to be broken first, right? And there's just different ways that we interpret it, even fundamentals, right? There's just some things that are a little bit more important depending on how you see the market and the way that you see the market react to certain economic data versus, how I've seen it. So for me, sometimes there's going to be other fundamentals that come out, like economic data, that won't really matter to me because I'm focused on, well, I know core retail sales, for example, is going to create a lot more volume in the markets than something like the Canadian dollar CPI is, because I don't trade the Canadian dollar. I trade, both pairs that I trade are more reactive to US news than the Canadian dollar's news.
It's great points right there. And like, kind of a side note, but also on the same subject, like I'm a sponge when it comes to this stuff. Like, you have to throw your ego out the door. Like, I'm always asking Sharma questions, always looking at YouTube to see like different things of how people do things. Not that I'm strategy hopping and like trying everything out in the live market, but I'm curious. I want to know like what someone's doing, how they see the market, and see what's going on. But the most important thing as a trader as somebody in business or, just anybody in general, just throw the ego at the door, because that's where you're going to start learning. When you have that ego blocking you, especially like in mentorship, right? Like, I can't help you if you have a big ego. Not that it's like, a cocky thing of mine or anything like that, but it's like you're not going to listen to a lot of what I'm saying or what I'm suggesting because that ego is blocking you. It's like your own worst enemy. So, like, if you just block that out and you just listen to what we say, and you test it out on your own, it's not like you take whatever we say and you just do it. Go test it out, right? Go see if it works for you, right? But just be a sponge. Have that ego. Just shut that out, and it's gonna make you a lot better.
100%. All right. Did
So,
you go over Forex Factory and all that already?
Yeah, we did all that
Okay, cool.
earlier on. Now, I think a couple of you guys may be getting FOMO over this move. This is only 7 pips right here. This whole range, right, to this market structure. Previous resistance, previous support in the 15-minute. Same thing with the 30 as well. So this whole move, it's like, all right, where's the stop loss going to be? Are you going to take this? Just let the range happen, right? Let the clean move happen. Let the low be created. Wait for a resistance to form. If you want to take anything in here, you could possibly get it. But why is the price tanking right now? Is this right before market open? Is that what's going on?
Yeah, 5 minutes before.
Yeah.
No worries, because that's a 4-hour level. 156, 700. So if we break below the previous 4-hour low, see how we're trying to break through right now?
Mm-hmm.
So I want to see a candle close here. We have about 4.5 minutes left. So I want to see a candle close here. You drop down to those 30-minute time frames. Clearly there's like consolidation around this area. There we go. So consolidation around this area, right? So what I'm looking for here, let's see. So what I'm trying to see is price clearing out of all of this. So then you have quick pips coming down here, partials. You take your TP here, or you could let runners come all the way down here and test structure again. This is not a break of structure. Your structure is not broken until this 156, 450, 500 area here is broken. That is still a test of structure from higher time frames. So I think we still have all these trade opportunities for sells. But personally, if price does pull back as it is right now and close above this 156, 700 area, then there's really nothing stopping us from coming back and continuing this bullish move back up.
It'd just be a liquidity grab before
Yep.
the open.
Yep.
Yeah, it's there's very short-lived scalps that you could definitely grab in here. It's just, if you guys are just starting out, you may want to just wait for a price to break like 156, 460, 450 over here, because then you're breaking market structure. And those are going to be safer sells with cleaner moves to the left. But yeah, like Sharma said, like if we did close below this level, get that retest right there, and you could possibly take this at about 15 pips there, possibly 25.
Mm-hmm.
I could see that happening. But it looks like we're rejecting over here.
Just from an economic data perspective, I still find the pound to be a bit weaker when it comes to the economy, right? Because inflation, we had CPI data coming out in pre-London session. So we had inflation increasing here as well. Not as significantly as it did for the US, like with PPI, but CPI data came out much higher than we had expected.
Shoma, you probably know better than I do. What if you increase rates, what's the time period that you're going to start seeing the data reflect in CPI?
Usually takes about, a month or 2 months. I mean, think about like you increase the interest rates, right? And then think about the rippling effect. I mean, we all are consumers and in one way or another, right? So think about how does it affect you? You have a loan right now, right? They increase the interest rates, and let's say you're part of the group of people who, like to buy stuff when you know that you can't afford it, but you just like to buy it, because that's what consumer behavior is. So let's say you're not able to afford paying back a loan or whatever, right? How long does it usually take? First 30 days, it's, you missed the payment, right? And then it gives you another, so 90 days, you have pretty much 90 days until it's actually called like you've defaulted on your loan. So it takes 90 days for you to get all that data, right? And officially call it a default on your loan.
Yeah, that's great. That's what I figured. Like maybe a month or two that it would take for you to start like seeing that in the market.
Yeah, I mean, we see it almost immediately because of all the other economic data that we're having.
True.
Right? But when you start, like, the major effects, you're going to start seeing that happen in about 2 to 3 months.
Okay. As far as, like, prices starting to decrease a little bit?
Yeah, so when I say, like, almost immediately, like, you'll see it happen, not specifically in just CPI, but everything related to consumers. Right? So, for example, there's, let's say, retail sales coming out, or even, if you increase the interest rates, you can't afford it anymore. People know almost immediately that, hey, my interest rate have increased, because around this time, a lot of people get loans on variable interest rates, not on fixed. And so almost immediately that, hey, I can't afford it anymore. So then what do? Right? You try to find ways to either afford it, which is right now a lot of people will have to go back and still try to find some sort of job or something, right? So then they can afford it, because a lot of people, they're still negotiating. A lot of people are still not filling up the jobs that are open in the market just yet. So there's still a gap in the labor market. So people will be going back, getting jobs and all that. And right now, a lot of people are negotiating, or they're trying to acquire new skill sets to move into new sectors. So all of that obviously takes time. I mean, think about it yourself. When you're applying for a job, you don't get a job almost immediately, right?
All great points. It's I mean, I don't know if anyone finds the economy as interesting as I do. I'm sure there's a lot of you guys that does, but I just think it's so interesting the way countries work, central banks and all that stuff.
Mm-hmm.
It's interesting.
And mind you, central banks don't get the data almost immediately as, like, other institutions would, like a bank would, right? Central banks get the data. They look at data over, like, months, right? They don't look at the data of, okay, what happened just last week, and then we'll base the interest rates based off of that. They're looking at what happened, the past couple of months, and then how is that shaping the economy, and then they shape their decisions. It's not that, 1 month in January, the NFP came out to be, like, extremely low, so we're just going to hike up the interest rates. You have to take the entire picture into consideration.
Mm-hmm.
All right, so we just rejected that one 56,700 area with that bottom wick, and it seems like we're trying to push up a little bit. But what I need to see, if you're looking for any sort of buy opportunities, is some sort of clear support being formed here. We're 30 minutes out from data coming out, right? The retail sales. So I want to see some sort of clear support being formed here in the next 15 minutes or so. And then if price continues pushing up from there, then you have some clean scalp opportunities going up to around 157, even 157, 100. But if price drops below 156, 700, then clearly wait for some sort of resistance. Because right now we're sitting in this little area of indecision. Right here. So wait for clear support, wait for price to continue bullish from the zone that Stefanos has marked off, and then to the upside.
Yep.
Yeah, I closed my trade completely, and I'll be looking to enter again on the long side if it breaks above 157, 100 again.
Mm-hmm.
Beautiful.
Perhaps even clear some of these wicks off.
Perfect.
Your exit plan?
It's going to be the original plan still if it clears above 157, because we got a lot of clean traffic onto the left if it does break above that. That's all going to depend on fundamentals. So, but my take profit this time, I'm going to break it down a lot more than before. First TP is probably going to be around 157, 290. And then the second one around 157, 620. and then if it really does keep continuing up until 158.
Yep, 158. Yeah, like you said, a lot of clean traffic. Again, you got that 157 700 level. Retesting this high, if we get some kind of a fundamental push that could bring us up, or we just gradually work our way up that way, we could definitely be seeing that area.
When it comes to securing the trade, I usually secure it like on the closes of the candles instead of on the wicks. That's just the fearful trader in me trying to secure whatever I have.
Okay, cool. What have you found that works for you as far as like percentage that you secure?
I don't have a lot of data on that, but that's just the fear in me.
Okay. Well, that's subjective. One, like we were saying with the strategies and stuff, one way for some person may not work for someone else. So that's something, like I could tell you how to manage risk till I'm blue in the face, but like that's something that you need to find out. And there's many things in trading, in any profession too, that like, some people just can't tell you how to do it. You just need to find out yourself and get that experience yourself, because you're not going to get that intuition or anything like that if you're just listening to someone else. How do you say your name?
Oh, Arsh.
Arsh. Okay, cool. I want to make sure I'm saying it right. Can't believe it's Wednesday already.
Yeah.
These weeks fly by.
Also, another thing for like, just to go back real quick, for securing, it is quite subjective, but also like one thing that I do is, for example, if it's an important level like 156 700, which is like from higher time frames, especially being like a previous 4-hour low, if price is kind of tapping into that and I see that there's pullbacks happening, like the way that, let's say if you were in a sell opportunity here, for example, and the way that I would mark it off, like I have the zone right now marked off here. So if I saw price pushing down and if I was in this trade opportunity, as price is continuing and then I start to see that, okay, it's trying to break below, but then it pulls back, and I saw that, okay, it's pulling back out of the zone, I would have secured something at that point, because this is an important level and clearly price is rejecting it. But let's say price continues down and this 156 700, like it didn't really matter above the 30-minute time frame, for example, then I would have waited for those candle closes because it's not a significant level. But if it's a 4-hour daily, sometimes even 1 hour, if it's like a consolidation on the hourly time frame, so if there's like consolidation going on around that area, then I'll look at wick rejections rather than candle closes. But if it's something like a 30-minute 15-minute time frame, then I'll just wait for the candle closes, because that just means that's not really significant, at least to me.
Got it. So higher time frames, you could look at the wick projection or wick tops or bottoms.
Yeah, I would, because clearly these are levels from like the 4-hour daily, weekly, monthly, where price has rejected before. It has respected this area as resistance or support before. So if you go back up to the 4-hour real quick, Stefanos.
Yes.
All right, looking at this 156 700 area. So see how price has rejected this area previously, right into these areas, all these wick rejections. So if price has rejected into that level multiple times, especially as wicks, then I would start to pay a little bit more attention to the wicks itself.
Okay.
Yeah, it makes sense.
And then that's where you give yourself that little zone, where in this case it would be like somewhere around here. So the zone that I have made is right below the previous 4-hour wick, which is right there. And then also I'm encompassing this little resistance made by these two candles, the previous high, right? Higher high, before price came up and created a new higher high. So if price breaks below that, then clearly you're breaking lows, trying to continue down, and then you can target some of the previous lows down here. But this is how I would kind of determine whether I'm looking for wick rejections or candle closes to take partials.
Yeah, looking at the 4-hour time frame, I think it's still maintaining structure, right? That a lower high is still being formed.
Yeah. So I do think price is trying to come back, because again, we just broke above an important level, right? But we never really came back down to retest it, which is this.
Yeah. Yeah.
right? And then if you just extend it over, pretty much the same thing. And if you were to extend it over even more, then you would see that, okay, that was an important level, even here on the 4-hour time frame where price keeps rejecting. So the way that I tell if it's an important level or not is I see how many times has price tapped into it and what usually happens right after. So in this case, where price created a resistance, it pulled back down and then created a higher low. And then finally we broke above it, but never really came back down to retest it, right? We've had strong candle closes above this. And then we came up to that 157 area right here. So 157, 100, which is a previous support that price pretty much ripped through, corrected this entire move up, and we're rejecting it. So now that's why, if we broke it down in like the weekly outlook, but if you go up to the daily time frame or the weekly time frame, or even on the 4-hour here, if you were to look at the overall picture, you can't really determine just right now that, hey, we're maintaining this bullish structure, or are we breaking out and we're maintaining a bearish structure at this point? Because this entire bullish move up has simply been a retracement of this entire sell-off that happened.
Okay.
So pretty much what we're sitting at right now is this kind of a movement. So you can't tell at the moment that, hey, we're going to retrace and then continue pushing up bullish, or are we just going to continue pushing down from here? So we're sitting in that retracement.
Got it. Yeah, even looking at these two candles that we're looking at right now,
Yeah.
their overall lengths are about the same, and it's pretty much indecision for me, at least in these two candles, the 4-hourlies.
Yeah. But you are starting to break the 4-hour lows, right? So same thing, like you need to wait for price to clear below that 156,700 area, so then we can continue down. Like right into this. Break below that, and then you have some good potential moves coming all the way down to the support. You're pretty much looking for a mimic move like that.
Yeah.
And another indication is that we still haven't broken the previous 4-hour high right here. Right? We pushed up, we kind of retested the same areas around this 157, 157, 100, and then we came back down and pushed and broke the low.
Yeah.
Alright, we're about to have this 15 close here in just a few minutes. I'm gonna check up on gold real quick. Also, another thing is this week with all the data coming out in New York session, we're probably only going to find scalp opportunities in New York. If you're looking for a scalp turn into swing, then you might want to check out Asian session or even London session. Yeah, so today's pretty much the last day to get the high impact data in New York. Does anyone have any questions?
Hey BJ, I have a quick question for you.
Yeah.
On GJ, I'm just wondering, what makes you? So I understand why you picked out that 156 700 level, but I'm wondering because I see the 156 800 level as also somewhere where price tapped into, where you see those wicks and it rejected pretty hard. So I'm just wondering how you would go about. Basically, I just want to see, kind of how you pick the level that you did, the 156 700, as opposed to the 156 800.
Because 156 700 is a previous 4-hour low. That.
Oh, okay, that was the key thing for you.
Yeah, if it breaks the previous 4-hour low, then that means that we're going to continue back down, right?
Gotcha.
So that 156 800 level, which is like this, right?
Mm-hmm.
That's what you're talking about. So here, if we get a break and retest and then continue up, that's where like these quick scalp opportunities were for Asian, right? And then this where like you take your partials and all that stuff that we were talking about yesterday. And then if price retraces back down, so the 4 hour time frame is like a intraday higher time frame, right? And so if that low is broken, then clearly we have enough bearish volume on lower time frames to start like a bearish trend for this retracement.
Gotcha.
And then I come back down and I look at, okay, what's the next level that price is reacting off of, which in this case would be right here. So we've seen wick rejections here multiple times, and then finally a sell-off, right? We've seen a support, which then gives you a nice bullish push up to that 156,700 area, which again is respected as resistance. And then you have a little, and then you have that resistance right there, and then price broke above, gave you a retracement, and then finally had enough momentum to continue up to that 157 level. So that could be possibly another level that we're going to come back down into and then push back up.
Gotcha. That makes perfect sense.
So guys, what did I miss?
Nothing, just breaking down the levels.
Cool.
All right. You want to go up to the 30 real quick?
Ooh. We're flipping over here.
All right, perfect. So this 15 is about to close here. So see how that 15 still didn't have enough volume even after tapping into or creating like a top wick rejection right here. See how this 15 still didn't have enough volume to come back down and fill the wick at the bare minimum. So that tells me that we don't have enough volume just yet. Now you're 15 minutes away from news coming out. So same thing here. If you're going to be looking for any sells, you definitely need to see some candles closing here. And at the very minimum, you need this wick here to be broken and then continue down. Because that's the current 4 hour wick, right? That price is making. It tried to break below the previous 4 hour wick and then left a range and then pulled back up and closed above 156,700 here on the 30-minute time frame. So if you're going to look for any sells, wait for this wick here to be broken. So then you have enough bearish volume to continue down.
What do you think? We're going to have negative numbers again?
I don't think we're going to hit that 2.1%. I think that's a little optimistic given the other numbers that we have been getting. But this is going to be... So you know how we were talking about interest rates and how long does it take to get priced in and everything like that?
Mm-hmm.
So this is a type of economic data that we continuously get, like every 16 months after the month ends. So this is already going to tell you, like, okay, what kind of behavior are we looking at? If retail sales here drops, then obviously that means that consumers are not spending money, right? And if you increase interest rates, obviously there are other things that people are going to be prioritizing: food, shelter, clothes, the necessities, over things that they don't have to get, over like luxury items or something like that.
Need and want.
Yes.
They're asking themselves the smart questions now.
I have a quick question.
Sure.
For gold, do you guys see the 1850 level as safer sells?
I see 1848 as safer sells, because once you start getting into here, 30-minute, 15-minute, it's very messy. So I would wait for safer sells below this level of 1840 over here, 1848, because you got a clean move here, and back to like the higher time frames too. These are the ranges you want to be trading, right? Like this is all like one big range basically. But you can argue that this is the range right here, and that we just need to break out of this. But once you get to the lower time frames, like look at these wicks, like lower lows, higher highs. It's just like all over the place in here. So it's very difficult. If you get that clean break and retest and candles closing in your direction, you get some volume pumping in, you could take high risk, high reward sells right here and lower your risk a little bit, and then hold the runner for maybe this area over here. But I think if you guys want to take safer sells, this is your move right here.
Right. Okay, yeah, makes sense. Because I was getting a little bit confused between those two levels that you were mentioning, and which one would be like the no trade zone kind of deal.
Yeah, it gets very tricky over here. We are holding support here. We did over here as well. We briefly came back below and then came back above this area. And this is actually what we were talking about yesterday, Sharma.
Yep.
With what time period? We were actually looking when we were doing our breakdown yesterday. This is where price was at, right? And at that point, we were looking at this level over here, but we knew that this was a significant level too, and we knew that we were we were stalling out over here, and you would want at least like a break and retest of this area before you continue down if you were going to take anything in here. So we were saying just be patient. I know it looks like you're missing the move. Like we're retesting this area. We're going to come down and retest. 4 hour looked that way as well, right? This is the main time frame we were looking at, where it looks like, all right, we're coming down to retest this level, but that 1850 level is so significant over here. We've bounced off multiple times. So if this price action wasn't right at that level, this would be a great opportunity to take a sell to retest these lows, right? But that's not what we got. We had a very significant level that I'm sure a lot of people got caught with, right? Because they got impatient, and we ended up holding a support and then continuing right back up, just kind of slowly chugging along. And now we're continuing the move right now from yesterday. And we got that move yesterday from the tensions decreasing in the Ukraine and Russia. Now we're kind of retracing a little bit, failed to break these highs up here, and now we're continuing right back down. So can we retest this low? Can we break below that low and continue down where you'll have safer sells right over here with a clean move?
Mm-hmm. So what if we get like a break and retest full bodied, maybe like in the 15-minute or 30? Like I was thinking if for some reason that does happen, that would be the only reason that I could potentially take a trade within that little area-ish.
You want to think about the time frames too, right? So here on the 30-minute time frame, if you're looking for a break and retest, then that's okay. Let's say this candle closes below the zone, right? That's 30 minutes right there, or like the next 8 minutes at least. And then you're looking for a retest candle close, right? That's another 30 minutes. And then your entry's gonna be on the third candle as it's breaking those lows for sells. So in that time span, look at when are the fundamentals coming out? When's the economic data coming out? Is it already going to be over by that point? If it is, then you're purely trading technical, right? So that's not going to be a fundamental move. Mm-hmm. But if you're looking to trade right when the data is coming out, which is going to happen in the next 8 minutes, then there's a very high chance you probably won't even get a retest. You'll probably get, some sort of a candle close, maybe a wick, but usually around like high impact, like retail sales, CPI, PPI, those kind of things. Sometimes you don't get wick rejections. You just see candles moving. Mm-hmm. So you want to think about those time frames as well as when you're looking for your setups. So that's why when you do your analysis, you're going from the 30-minute to 15-minute. You want to think about, can I potentially look for a break and retest here? And if a break and retest does not happen and I'm looking to trade the news, then what kind of moves should I be looking for? That's usually when you're looking for those bottom wick rejections or top wick rejections and then entries, those impulse trades.
True. Makes sense.
All right, we got
any other questions?
7 minutes left here.
It's actually, I want to see what the markets are looking like right now. We're just waiting for this retail sales to come out. We also have a lot of fear in the market too.
Yeah, this is all market sentiment. Look at how price is, making those wick rejections, not just on gold, but also on GJ. And these are levels that we've just marked off, right? And then you could clearly tell that you have some sort of sentiment kicking in. given, price making those wick rejections, and then where is price headed after that, right? Those wick rejections, and then price is trying to push up. So all we're doing is testing levels. We haven't broken highs, we haven't broken lows, but all we're doing is just testing levels. This is all purely market sentiment towards like the forecast and, the economic data that we're expecting.
100%. And, it's expecting bad numbers, we could just be grabbing liquidity right now before continuing up. And then, this may not even be the trend. Like it may still be this.
Yep.
But again, guys, just when it comes to trend lines, unless it's like mainly part of your strategy, it's focus on the levels first. Like that's got to be your main thing. These are all just very subjective. They could throw a lot of people off. 1860.
I personally just draw them like only when I'm doing the trade breakdowns with the team or here on YouTube, just to show like the visual structure. But other than that, like you could legit just draw out like arrows and just be like, where are my higher highs and where are my higher lows?
True.
Right? If that's something that's helpful to you. You got your, obviously a massive sell-off, create a support, and then this is what we have been doing. And all we're doing is just coming back and retesting it, right? We haven't really broken previous lows.
100%.
So then you wait for a candle close here in the next 4 minutes. And then you wait for a bottom wick and a push up.
Let's see. First Factory. Canadian CPI 2 coming up. So if anybody gets the data, whether you're on Zoom or YouTube, before any of us do, if you could just type it into the chat, that'd be awesome. Forex Factory likes to take all day.
So this is the type of data that you could probably drop down to the 5-minute time frame, and then wait for the first 5-minute close, and then see how the next one continues, and take your trade based off of that. I'm still gonna wait for the 15-minute, but this is a high impact. Obviously, it's telling you something about consumers, so it's gonna be great volume.
Question, BJ. Is this data only going to move gold the most, or is GJ going to be pretty highly affected by it as well?
They're both going to be impacted, but I think gold is going to be affected a lot more.
Absolutely. If you get terrible numbers, then you'll see GJ getting affected because of the yen.
Mm-hmm.
That's a good point about the 5-minute. Guys, just trade the reaction to the news.
So for gold, if you go into the 30-minute time frame. Alright, so let's take a look at what just pretty much happened here, right? So price came down, rejected right into these areas, right? So that bullish momentum that we're pretty much just talking about. And it's breaking previous 30-minute high. Your buy opportunities happen as soon as the next candle. So this one's going to close in about 2 minutes. What you need to see happening here is this current candle closing at or above the zone. The next candle, given how far we are from the forecast with the economic data, creating some sort of a bottom wick and then pushing up. As it breaks the current 30-minute high, that's your entry, right? To the upside, and then you can place your stop loss below the zone. You could target also this 1860 area, and then what Stefanos has buys above 1860, you could let runners go. But understand that by the time price taps into this area, you should secure something. If you can't secure something because you're trading penny lots or something, then move to break even or trail your stop loss. But you don't have an entry until that wick is broken.
that wick, the area is the 1856 level, right?
Yeah, the current 30-minute wick high. And the same thing for GJ, where you don't have an entry unless the 30-minute bottom wick is broken.
Use impact. Somebody in what's Pipcraft, his stream was telling me about this website right here, and he says it reports a lot quicker than Forex Factory. Also gives you the seconds. You got 10 seconds. Let's see what we get here. All right, you guys are looking at gold. All right, just came out. Anybody get numbers? Wow. Okay, we got some good numbers. 3.8% percent right over here. For retail sales, core retail 3.3.
So that means as soon as that 30-minute zone that Stefanos has marked off is broken, that's your entry. So you don't have an entry until this. You have to wait for the 30-minute wicks to be broken. Until that's broken or price continues up and breaks above here. But we did have positive data coming out, so I do think we could have that potential move to the downside. This is where you drop down to the 5-minute time frame. You wait for the first 5-minute close. You want to see a strong close, that wick that the current 5-minute is leaving. So you want to wait for that entire wick to be filled and then a continued push down. And then GJ is also creating that little support and pushing up. Same thing there. Wait for the first 5-minute close. It'll correct itself because even GJ has a ton of volume. But gold is just reacting off those levels right now. We're pretty much collecting liquidity. Look at the wick rejections.
This candle's pretty wild.
Awesome. Kind of looking like we have this range right over here, almost like a fake out. We're coming right back into it. Gonna close below over here.
Yeah, so pretty much what we need to see happening here if we're going to look for a sell is this candle to continue down and fill this entire bottom wick that it has left. Right? Once that happens and there's a strong bearish close, then we can look for potential sells coming down. You still don't, this is still a no trade zone.
Yep.
GJ is setting up nice though.
Let's take a look. There you go.
Yeah.
Support.
Support formed. Again, wait for at least the first 5-minute close here.
Affected US 30 a little bit. Gold still rejecting.
Hey VJ, for GJ buys, you wait for the 5 minute close above that zone, and then same thing once it passes that wick.
I'm waiting for. Can you drop down to the 5 minute Stefanos?
Yes.
So what I'm looking for here is this entire support zone here still to be respected. This current candle, even if it closes as it is, I just need it to close above the previous 5 minute highs here. We've broken the previous 5 minute, or that resistance right there. So in the next 30 seconds, if this candle can close above this area, at or above, then I'm looking for the next candle to make some sort of a bottom wick and then continue pushing. That's the entry, and then now your stop loss could be somewhere down here.
Gotcha.
What's like a more of like right above this level right here? If we could get like a break and retest it here,
Mm-hmm.
I would be taking this right there.
Yeah. I mean, that's very valid too. I'm thinking about the time frame again here. The
Mhm.
first 5 minutes after the news comes out, you're still having the reaction to the news, and it goes up until like the 15 minutes after news, right?
Mm-hmm.
So here, see how the candle closed bullish? So I'm waiting for this candle to flip and then continue pushing.
Are you entering this?
Not just yet. I'm waiting for the current 5 minute.
Where is it? Bull keeps rejecting.
All right, I've entered. So gold also on the 5 minute closed bullish. The current one making a bottom wick, pushing up.
Yep. Rejected that level again.
Yeah, so what we just need to see happening here as well on gold. Disrespect of the support. Price pushes up. You're tapping into the zone, so just wait for this here to be broken, and then you have those buys to the upside. But take partials as price is tapping into these levels. Yeah, I've entered GJ.
And what's your target, Sharma?
I'm targeting at the moment 157.5.
Got it.
So 157, of course, take some partials there. Let price continue. The 0.5 is just so we have enough room if I need to let runners go. But 157 is my partial.
Got it. Yeah, I like how I've seen this setup before and price hold support and continue through. I like how this current 1 hour candle created a higher low, and now it's flipping bullish back above this area.
Mm-hmm.
So it's like we grab liquidity back in this range, holding support, and now we're going to continue right back up.
Yep. And also my target is the current 4 hour wick high. So once this candle flips and we see that volume to the upside, then we could target 157.500. Or like 157, what's that, 800 level? 157.600.
Got it.
That's like based off the 4 hour, yeah.
On the 4 hour?
Yeah. So that resistance right there. From where we had the sell off, yep. And then if you look to the left, then price has reacted to that as well.
Oh yeah. Anywhere in this whole area.
Mm-hmm.
Good target.
Can we keep the stop loss to the current candle low, Vijay, on the GJ buys?
We entered, or at least I entered based off the 5-minute time frame. That's too tight of a stop loss. If you do it off the 30-minute time frame or 15-minute, then yeah, you could keep it under the current candle low.
Okay.
Are you still waiting, Stefanos?
What was that?
Are you still waiting?
Yeah, no, I'm not in this right now.
Oh, okay, cool.
Just I'm waiting for. I see what you're doing, 100%.
Mm-hmm.
I'm waiting for like maybe a retest of here or a break above 157.
Yeah.
Just being more of a scalper anyway.
Yeah.
That's typically what I look for. But I see if we close back into this area over here and get like a retest of this area, I could see myself taking something, lowering my risk and taking something back up to 157,
Mm-hmm.
holding the runner and letting that go. But I want that close above 800, like a strong close on the higher time frames.
Yeah. Cool. My stops are at 700 just to get enough room if it wants to, pull back and all that type of stuff and then continue. 156, 700.
Got it.
Yeah, there's not much else besides the FOMC meeting minutes for the rest of the session, so it's going to be all technical move. Gold is pushing up real nice though.
Is it?
Yeah.
The gold. Nice. This is what you were looking for.
Yeah.
What the hell? Oh.
But I've already entered GJ, so I'm not going to trade both.
Yeah. Hold on 1 second.
No worries.
Hey VJ.
Yeah.
We had good data come out for retail sales, so technically gold should be dropping, right?
Yes. It's
Do you think
reaction
this
to
is-
the news, right?
Yeah. And do you think this is down to the uncertainty between Russia and Ukraine and
Mm-hmm.
the whole troops not moving and stuff?
Mhm.
Okay. Mm-hmm.
Yeah, so it's not just one fundamental,
Yeah,
right?
of course.
It's multiple different ones. We just saw reaction to the news when you drop down to the 15 5-minute time frames.
Mm-hmm.
But higher time frame structure is always going to hold. And obviously right now, the more important fundamentals are, of course, Ukraine, Russia, the geopolitical tensions. If you're trading based off the 4-hour daily time frames and all that type of stuff. Right now, all we're seeing is just reaction to news. Right. So we're about to have a 15-minute candle close here soon. So these are all just quick scalp opportunities until you break above those hourly and 4-hour levels. And then your scalps turn into swings. But again, this week I don't think that in New York session we're going to be able to catch scalps to swings, just given the data that we're getting. So those opportunities I think are more in Asian or London session. So this is the time to know the limitation of your trades.
Sharma, you still in?
Yep. I do think we're probably just gonna end up just tapping into the zone just to continue grabbing liquidity, and then the 9 a.m. Eastern candle is probably gonna move us in either direction.
Got it. Bullish close right there. It's in the chat. Which gold trade, Jim?
Sorry, I meant if we had taken this news trade on gold, what would have been a valid stop loss?
That blue zone, or like right underneath it, just so you could give it enough room to tap into it.
Underneath the 30-minute?
Yeah, this one here. Right underneath that. So you're keeping it, so you're giving it enough room that, hey, you could come back down, retest. Same thing with GJ here. That's why the stop loss for mine is like right underneath like the 7. Like my actual stop loss is 156.693. Right? And so I'm giving enough room to come back, retest into these areas, grab liquidity. Same thing for gold here. Give it enough room to retest into these areas, grab liquidity. But it's tight enough so that if price broke below these previous lows right here, then obviously it's going to be headed back in the opposite direction. So you've just minimized your risk in that aspect. Right, I don't think for rest of today, let's take a look at if there's anything else coming out today. I don't think the market's going to be reacting heavily to any of the other fundamentals. FOMC meeting minutes, probably. Usually, sometimes we'll see market reacting to that. Sometimes it's a mute reaction. And then Asian sessions, quite chill. But yeah, that was pretty much, I guess, the last high impact fundamental of the week. After that, tomorrow we have unemployment claims. G20 meetings start. FOMC member speaking, and then Friday you have again G20 meetings, FOMC member speaking, just all that. So I don't think there's gonna be too much coming out for the rest of the week.
Yeah, we got a lot coming out. FOMC members on Friday.
Yeah, just a ton of FOMC members speaking, but high impact wise, there's not much coming out, so there's gonna be like technical moves rather than economic data reactions.
100%. Gold's moving.
So at this point, as price is pushing up, like let's say you've entered this trade, then you would secure something or at least move to break even as you're approaching that 1860 level, and then as soon as price taps into 1860, you secure something there, and then if you want to let runners go, you could, or if you see price rejecting it and then closing below that area, then that's pretty much your trade. And GJ took me out.
Yeah, GJ just dropped.
Mhm.
Let's see, gold.
Still gotta wait for that candle close below that zone for sells though, so I wouldn't enter in sells immediately. I mean, I'm done trading personally. That was my only attempt I was gonna give GJ today. But still need to see those candles closing.
Can I ask another quick question on gold on the 5 minute?
Nope.
Mm-hmm.
Sure.
Could we have seen this as like support forming and maybe like a small little break and retest? And if we wanted to take it around here, could that have been valid too?
Yeah, that's what we were talking about.
Oh, okay, sorry, I'm like trying to like multitask.
No worries, no worries.
Looking at my charts and journaling.
No worries.
Could a stop loss then instead of over here, would have around here? Could that have made sense too?
You could, but
Like,
personally,
if that
this
would-
is a 5 minute time frame. For me, that's too tight.
The stop loss?
Yeah. I would still put it right underneath the zone just to give price enough room to like make some wick rejections and all that and grab liquidity. And then as price is breaking above like these minor resistance areas and stuff, that's where I would move to break even or even, secure something along the way. And then this is obviously the limitation of your trade. So
So the entry you guys would have taken would have been there.
yeah, if I had not entered GJ at that time, GJ was setting up nice and like the setup and stuff that I was looking for, and then it failed to break above the zone, pushed right back down, took me out. But if I hadn't entered GJ, then I would have entered gold here. Yeah.
Okay, makes sense. Thanks.
Yeah, for sure.
I'm trying to understand the market move here. With the retail number coming out, we would have expected GJ to move up, right? And gold to move down because it was a positive number. But we're still seeing the opposite effect.
Yeah.
Or it's not necessarily with GJ, but with gold, definitely. Like, gold should be going down. But, other things could be contributing to this as well. Technical levels as well.
Oh, shit. You know why GJ is dropping?
What happened?
Because there's news about no evidence of Russia pullback. If you go into Forex Factory, scroll down.
News?
Yeah. Right there.
Wow. Yeah, no, were we talking about that yesterday? I think we were. Where, like, there was no evidence that they were actually, like, pulling back as far as, like, bringing troops back to the bases. They were just, like, pulling back a little bit, but...
Yeah, we were talking about that when we were talking about Biden's news.
Yeah. So we got inflation numbers.
So you had reaction to retail sales, and then right after that, right now, you have reaction to market react to this news right here.
Who is Lavrov? Is he like the he controls the military? I keep hearing this name. I don't know who he is.
He's the Minister of Foreign Affairs.
Okay. So he's basically our Secretary of State, or would be.
No, no,
No.
no.
Isn't that what a Secretary of State is?
It is, but I guess so. Yeah.
Yeah, that's basically like what Mike Pompeo was,
Mm-hmm.
for 4 years, and what Blinken is right now, just Minister of Foreign Affairs, like dealing with other countries and stuff like that.
Yeah. I just think there's like additional.
Yeah,
Stuff,
of course.
but, yeah.
He probably has, like, with a country like Russia, obviously it does not run like the United States.
Yeah.
He probably has more say-so
Mm-hmm.
than our Secretary of State would.
Yep. All right, we got like
But then
about
again-
6 minutes left, so we'll just talk about like, all right, if you enter a trade, if you're looking for a trade, what kind of stuff to look for. I am personally done for the day, and then I will come back tomorrow, to in New York session for another attempt. But I think that's about it. Like, I don't think I'm going to be trading on Friday. But if you're looking at gold, if you've already entered at this point, you should be risk-free in your trade opportunities. Pay attention for gold and GJ, regardless of whatever's happening right now in the 30-minute, 15-minute time frames. Pay attention to the 4-hour levels. Pay attention to the daily levels. Those higher time frame structures are always going to be held, regardless of whatever price is doing on like the 30-minute, 15-minute time frames, all the reactions to the news and everything. And clearly we're still sitting in some of these consolidation areas, especially with GJ. So that's another reason why I'm pretty much done for the day, because if you zoom out here on the 15-minute time frame that you have, Stefanos, or you could, or you could even go to the 30-minute.
Yep. There you go.
All right, and then just zoom out a little bit more. There you go. That's it. That's perfect. So the reason why is because all of this is, again, all consolidation. So that's why, that's the only attempt. So if you're going to be looking for another trade opportunity, so we talked about this zone here, right? That the structure is not broken until this zone here is broken. We talked about that a while ago in the stream. So if you're looking for additional sell opportunities, wait for closes below that zone, retracements, and then continuation down. Take partials at these levels. These fake outs that you've had, it's the same level that price has been respecting into these areas. Take partials, move to break even, trail your stop loss, all that type of stuff. And then 156 is again the runners. I would personally, if it was a purely technical move, since there's not much else coming out today from an economic data perspective, and just like low impact news coming out, I would probably secure majority here, trail the stop loss, and then let runners go into these areas, into Asian session. So again, your sells are only after this zone here is broken, because clearly price pushed down. You're tapping into that consolidation there. So this could be a liquidity graph if price just creates a bottom wick and then flips back up bullish and continues in the opposite direction. So that's how I would manage GJ here. If you're looking for any other trade opportunities. For gold, can you go into the 30-minute? Same thing, zoom out a bit.
I'm still sticking with my levels as far as GJ as well. Like, they're still pretty valid as far as like 157. Wait for buys over there, unless we hold support over here. But again, like with the technical analysis that we saw like this morning, where we've just been respecting this bullish structure. Obviously, a lot of this is technicals. We break it earlier in the morning, where we come down, create this low, come up, retest this level over here, and then we get the news that came out. So looking for an entry right over here, if you wanted to take this, you got to see if there's anything valid over here as far as like respecting your structure.
Yeah.
And how we respected that resistance over here. We get a lower low forming. Top wick formed on that candle, pass the low over here, get that volume coming in around like 845. Bouncing off this trend line over here, retesting it, and then you take this thing down. But again, you just gotta, this has got to be part of your setup and your strategy and all that stuff. But I think gold still holds the same. I think safer buys are gonna be above 1862. Or 1860 as well. And I think safer sells are gonna be below 1848. And yeah, that's about it. I think we're just in a big range right here.
Yeah, so that's pretty much it. And then if you zoom out a bit here on the 30-minute time frame for gold, another reason why you want to kind of stay out of it is clearly, what price has been doing into these areas. So use whatever has happened in the past to understand like what are your trade opportunities. All of this, if you really map it out, is simply a retracement move. That's all we're really doing here, right? We're not really breaking above, we're not continuing a bullish structure or anything like that. So that's why if you've already entered this, then you want to make sure that 1860 is kind of where you're taking partials or your TP or whatever it is. But I would secure, something here and then move to break even or trail my stop loss. Because again, it's too early to say if price is just going to drop down from this point, or are we actually going to break above, do a retest, and then continue back up.
100%. And you're getting this move what's happening right now,
Mm-hmm.
based off the Russia news too.
Yep.
Some fear being pumped into the market. We wait for the reaction, see if we actually get that close above, and then you can continue above. If that, if something happens today, obviously that's going to be a nice mirror to move. But I don't know if anything's going to happen. It's just that was just a report, so that's why you're getting that little pump.
Yeah, and then if you go onto like Bloomberg or any other website, like it'll tell you, like right now they already have news coming out about Russia's troop buildup.
On Bloomberg?
Yeah.
Okay. I don't have Bloomberg anymore.
So with all this news, especially with like Russia, Ukraine, of course you have your commodities, safe haven currencies, but also if you're trading oil and all that, like it's going to be affecting that as well. So you have good moves setting up. It's just trade the reaction to the news instead of the actual news.
Amen. Any questions, guys?
Yeah, quick question. So, the positive news that came out today for PPI made gold go up because of the fact that we're in a bad economic conditions. Basically, like same thing as yesterday for CPI.
No, today was not PPI. Today was retail sales.
Retail.
Sorry, what?
Today was retail
Yes,
sales, not PPI.
Oh gosh, retail sales. That's what I meant. Well, is it the same thing, kind of? Because we're in a bad economy?
No, retail sales. If retail sales go up, then that means that consumers are spending money, right? Which is a good thing. That's exactly what you want.
Mm-hmm.
And then you have reactions to that news, and then also, macro fundamentals and all that. So you want to take a look at the overall picture. PPI yesterday came out at a much higher level than what was expected, right? So that essentially means that producers are paying a lot more for their products and all that, which our costs are going to get passed down to the consumers very soon, right? So then you have obviously that kind of fear settling in as well, given the problems that we have with inflation already. So that means that you could expect higher inflation in the near future because those costs are going to get passed down to the consumers. And then from there you have retail sales that came out. So that means as of last month, we had pretty good sales from like the consumer's perspective. So consumers are spending a lot more money, like last month. And then what else do we have? Do we have? Let me check yesterday's. Yeah, yesterday was just PPI, and then we also had CPI earlier in the week, right?
Mm-hmm.
So then all of that data as well that you want to be paying attention to. So look at the overall picture of the economy, not just one economic data.
Can we say that we're a bit surprised that retail sales went up?
I personally
I
am.
think that much I was.
Yeah, I personally am because we have been getting, if you click on the folder, we have been getting a ton of mixed core retail sales data, right? And then if you click on more, right underneath history.
Oh, gotcha.
So see how it's been fluctuating?
Mm-hmm.
So I'm surprised that it came out to a much higher level.
It's also the most in 10 months.
Mm-hmm.
And
Right? So 3.3. It's we haven't seen that. We've been seeing negative numbers. Last month we saw negative numbers.
Mm-hmm.
And we haven't seen numbers that high since April of 2021, where things started to open up a little bit more. People getting vaccinated, stuff like that. People shopping and stuff. Spring, summer coming around the corner.
All right, awesome.
Can we say that we're surprised of this news because of also the news that came out yesterday, where we maybe could have expected consumers to just not be purchasing?
No, because those costs have not been pushed down to the consumers just yet.
Oh.
Yeah, this is the business owner, right? So like this is what the business owner is paying for products to sell to you. So obviously, like they want to make a profit. They're going to be jacking their price up a little bit more, but they've been incurring these costs. I think PPI over the year is still higher than CPI. I know it was for 2021, so that means they were paying more, and they weren't passing anything on to the consumer yet. So now we're going to start to see. Now you start seeing this. Previous was 0.2. Now this past month it raised by a percentage.
Mhm.
So now it's like, okay, I'm a business owner. Like, how can I increase my bottom line? I'm going to start pushing this out onto the consumer because everyone else is.
So you
Right?
go
And that's been
from
going.
so you go from producers to retail side, and then you go to consumers. Right? So that's the cost of making something like a finished product. And then you pass that price on to the retail side. So if you look at when was that, the CPI, RPI, and PPI coming out for GBP?
Mm-hmm.
That's
Where was that?
that's what it was. It was today.
There you go.
So it's the producers, and then it gets pushed onto the retail side, and then it gets pushed onto the consumer side.
Oh, so you're saying that's what it costs to make the product?
So PPI input, raw materials, and then PPI output is raw material, or like with the labor and all that stuff.
Mm-hmm. Okay.
So GBP, they break it down. We just say PPI. That's like the cost of making the good and finishing it.
Sure. So they actually break it down one more step.
Yeah.
All right. Well, I think that was a solid session. More of a dud as far as some of the moves. We've had a consolidating market today. So we'll see. What do we have coming up tomorrow?
It's just unemployment claims and all that.
Yeah, FOMC meeting minutes today at 2.
Yeah.
So they can, the more hawkish they sound, you're going to see gold continuing bearish. And then, tomorrow we got unemployment coming out. We got the start of G20. We got more FOMC members speaking.
Mm-hmm.
And then moving into Friday, you got core retail sales coming out for Canada, existing home sales, some real estate stuff, G20 day 2, and then more FOMC members. Oh, also retail sales for Great Britain as well.
Yeah. So pretty much for the rest of the session, watch out for those higher time frame levels, 4 hour, 1 hour time frame. And then, yeah, it's going to be all a technical move, so wait for your break and retest, all of that. Make sure you're not trading in consolidation. So the news, whatever volume that there was, you're pretty much done at this point, especially with the retail sales.
Yeah, 100%.
And then if you guys have any questions, as always, feel free to reach out to either of us, and we'd be more than happy to help.
Absolutely. All right, guys, have a great day. Get